Yes, sir. Sir, very, very, very happy afternoon to all. So we are doing capital structure theories. We have done. Actually, the relationship is first cost of capital. We calculated KD, we calculated KP, we calculated KE, we calculated KR, we calculated KO. Sir, because of Alzheimer's, I'm asking you a question, sir. Can we recall what is the formula for KD? Redeemable debt. I into 1 minus T plus RV minus NP divided by whole divided by RV plus NP divided by 2 into 100. Right, sir? If the debt is a redeemable debt, this formula will come. If it is irredeemable debt, I into 1 minus 3 divided by NP into 100. If it is PD, that is, sir, KP, sir, irredeemable KP PD divided by NP into 100. Redeemable PD plus RV minus NP divided by N. Whole divided by RV plus NP divided by 2 into 100. Then we are having KE 5 formulas or 6 formulas. Dividend price approach, earnings price approach, dividend price plus growth approach, earnings price plus growth approach, realized yield approach, and the capital asset pricing model. Generally, KR is equal to KE if there is no flotation cost. If there is flotation cost, we have to rework the KR by using the KE formula. But the denominator, sir, we have to take the gross and not the net. Are you remembering? Simple, that's it with regard to that. So if you work out the weighted average cost of capital, the answer what we will be calling it as KO. That KO can be worked out either using the book value weight or the market value weight. Now, after we studied the cost of capital, we have entered into the capital structure theories. NI approach, NOI approach, traditional approach, Modigle and Miller without tax, and Modigle and Miller with the tax. Now, the last line we said in the MM with the tax is, if there is tax, value of the levered firm will be higher than the value of the. Now, how MM approach theory will be a theory of irrelevance, it will be a theory of relevance is what we have stopped. Correct? Now, MM itself are saying that, illappa, there is a process will be happening called as arbitrage process. What process? Sir, what is arbitrage? Sir, this is propounded by Modigliani and Miller. It is proposition capital structure irrelevant to the what valuation. Because according to MM, if two firms are alike in all aspects except capital structure, value of the firm will not change. This is what the story of the MM approach. Right? Explanation. If two firms are alike in all aspects, example, return are same, that is EBIT same, sir, beta same, size of the firm same, except what structure? Capital structure cannot have two different values. Even if they have initially, because of tax, sometimes value of the levered firm may have more value than the value of the unlevered firm. Purida? Their value will be made automatically equal due to operation of a process called as what process? Arbitrage process. So, what is arbitrage, sir? It is a process of buying in cheaper market. You will go and buy the things from the cheaper market and sell in the what market? Costlier market to make a arbitrage gain. That means if there is tax, what MM is saying that two firms will be there, levered firm and unlevered firm. If there is tax, this will be the position. This means value of the levered firm will be higher than the value of the unlevered firm. You tell me whether you are shareholder in this firm or this firm, your risk is same, your return is same, your size is same. Then by investing huge amount in levered firm, why are you holding that, sir, 100%? Sir, if you are holding 100% of the what firm also, unlevered firm also, this firm also earning same EBIT, correct? So let you sell the shares in levered firm and go to the, this is called as arbitrage. This is called as, sir, இவ்வளோ பெரிய இன்வெஸ்ட்மெண்ட் பண்ணி இங்க இவ்வளோ இபிஐடி என்ஜாய் பண்றதை விட இதை விட கம்மியான இன்வெஸ்ட்மெண்ட் எங்க பண்ணாலே அன்லிவர்ட் ஃபார்ம்ல பண்ணாலே எனக்கு என்ன கிடைக்கும்னா same EBIT கிடைக்கும். So due to this process, demand of the product in the cheaper market increase. So every people will start sell the shares of the levered firm and they will start investing in the unlevered firm. Are you really with me? So everyone will start selling the shares of the levered firm and they will start buying the shares of the, then automatically the demand of the unlevered firm increases and demand of the levered firm decreases. That's what they are saying. Due to this process, demand for the product in the cheaper market increases, thereby decreasing its price. After some time, equilibrium price will be achieved. That means the value of the levered firm reduces and value of the unlevered firm increases. It will reach a price called as what? Equilibrium price, and the arbitrage process will then stop. Till that, a process will be happening. So what is arbitrage, sir? Arbitrage process means selling of all securities of what firm? According to if there is tax, which firm is overvalued? Levered firm. So you will sell the shares of the and purchasing securities of the what valued firm? Who is undervalued firm? Unlevered firm. Equals to the percentage of equity holding in the overvalued firm. Hello, sir. So there are two situations you will be having. Number one, sir, where the levered firm is what valued? Overvalued. Sometimes levered firm will be, if levered firm is overvalued, people will start sell the shares of the levered firm and start buy the shares of the unlevered firm. This is called as primary arbitrage. What arbitrage? Sometimes unlevered firm is overvalued. What, man? Unlevered firm is overvalued. If unlevered firm is what valued? Overvalued, my dear lovable students, hello sir, then this is the unlevered firm and this is levered firm. People will start sell the shares of the unlevered and people will start buy the shares of the, sir, what if the levered firm is overvalued? What the investor should do? Number one, investor sells his present equity holding of the what firm? In levered firm, investor is having equity. Yeah, ada modala vitru. Number two, investor borrows proportionate to his share of debt in the what firm? எந்த அளவுக்கு நீ இங்க equity வச்சிருக்கியோ அந்த அளவுக்கு you have to borrow. Number three, investor purchase security of the what firm? Unlevered firm equals to his percentage equity holding in the what firm? Sir, for example, earlier you were holding 10% in the levered firm. The same 10% of the equity you purchase in the unlevered firm. Are you agree with me? But here, sir, investor sell his present equity holding of the what firm? Unlevered firm equity model. And investor purchase security of the levered firm equal to his percentage. Here there is no need to borrow. Hello, sir. So because of shifting from the overvalued firm to the undervalued firm, investor will be having some excess money in his hand. Are you really with me? That is called as gain by investing in the what valued firm. So an investor will gain by investing in the what valued firm, since the same amount of present income can be earned by investment amount, which is less than the what investment. So by investing a more amount, I was enjoying, sir, 2,40,000 EBIT in this company. But by reducing a less amount in a unlevered firm itself, I can enjoy 2,40,000, right? So that is called as arbitrage gain. That is called as, sir, when this arbitrage process will comes to an end, when both the company reaches the equilibrium value, then arbitrage process will comes to an end. So according to Modigliani and Miller, arbitrage process will comes to an end when the value of both the company become identical. Value of both the company become. So there are two types of arbitrage are there. Number one, primary arbitrage, and if the value of the levered firm is more than the value of the unlevered firm, that is called as what arbitrage? If there is primary arbitrage, people will shift from levered firm to the, sir, if the value of the unlevered firm is more than the value of the unlevered firm, then it is called as, in case of secondary arbitrage, people will move from unlevered firm to the levered firm. Right, sir? Sir, for what purpose? Like monkey, they are shifting from levered to unlevered, or, sir, unlevered to levered, to obtain one of the objective. To obtain what? இது ரெண்டுல ஏதாவது ஒரு objective அவங்க achieve பண்ணணும். Number one, increased profit with the what investment? Same investment. Sir, if I am investing X amount in levered firm, I am getting 2,40,000 only, no? Yes, sir. But if I am investing the same in another company, I will be getting more. Are you really with me? That means I want to increase my profit with the or same profit with what investment? Low, why I have to invest this much amount in it to get 2,40,000? If I invest lesser than this amount itself, I can get 2,40,000. Correct? Yes, sir. Sir, how arbitrage process when levered firm is what valued? First, this is the 5-step approach. How many step approach? Now think, practically think. There are two firms are there. Levered firm and now in the levered firm's value is higher. You are a equity shareholder in the levered firm. First sell, my dear lovable students. Sell. First you sell the equity of the what firm? Levered firm. Sir, you are not holding 10% of the levered firm. You are holding only the 10% of the equity of the what firm? Levered firm. But you are going to invest the 10% equity of the unlevered firm. Correct? Yes, sir. So, like this, you have to analyze and understand, my dear lovable students. One is levered firm is there, other is unlevered firm is there. Our situation is value of the levered firm is higher than the value of the, then only primary arbitrage will work. In this levered firm, equity is there and also debt is there. Correct? In equity, you are holding 10% and in debt, you are holding 0%. Correct? Now, you have to sell the equity in the what firm? Levered firm. Sir, once you sell the equity in the what firm, you will be having money. And now you are moving into the unlevered firm. There you will go and invest, sir, the 10% in the equity of the unlevered firm. Correct? But risk changed. Because earlier you were holding only equity of the levered firm. Correct? But now you are holding 10% of the equity of the unlevered firm. So, sir, 10% holding equity of the levered firm is not equal to 10% equity of the what firm? Levered firm is not equal to 10% equity of the what firm? Unlevered firm. Why, sir? Why, sir? Logic. The reason very simple. If I am holding 10% equity of the unlevered firm, I can say that I am holding 10% of the company. But if I am holding 10% equity of the levered firm, I am holding only 5% of the company. Because if I hold the same, how much percent? 10% in debt, purida. Then I can say that I am holding 10% in equity and 10% in debt, total 10% I am holding. But now I am holding 0% in debt. Yes, sir. I am holding only 10% in the equity of the levered firm. By selling that, I can't move into the unlevered firm. Yena, inga levered firm oda equity la mattumna 10% vechirundha nanu. But unlevered firm oda equity la 10% vecha, unlevered firm oda 10% vekkiradhukku equal. அப்ப என்னோட இன்வெஸ்ட்மெண்ட் என்ன ஆகணும்னா மேட்ச் ஆகணும்னா எங்கிட்ட காசு பத்தாது. That's why they are saying that borrow. That's why they are saying that's why you have to borrow. But if you borrow, my dear lovable students, some excess money will be there with you. That excess money is called as arbitrage gain. And that amount has to be invested in the unlevered firm, 10% of the equity. Then if you calculate the net income before arbitrage and after arbitrage, it will be exactly one and the same. And that comparison will give you extra money with you. எப்படி சார் இது ஒர்க் அவுட் ஆகுது? That I will be solving by illustration number 1. Can we? There are two companies, man. One is N Limited and M Limited, having same earnings before interest and tax of how much rupees? 20,000. Sorry, two companies are alike in all aspects. Then only this chapter will be applicable. So M Limited and N Limited, man, EBIT of 20,000 and 20,000. Can I proceed? M Limited is a what company? Levered company, having debt of how much lakh? 1 lakh. At how much percent rate of interest? The cost of equity of N Limited is 10 and M Limited is 11.5. Compute how arbitrage process will be carried out. Understand very clearly, man. You have to answer to me. You have to shout along with me. What is the EBIT of M Limited? 20,000. EBIT of N Limited. Sir, M Limited is a dash firm, levered firm, whereas N Limited is a, my dear lovable students, M Limited debt how much lakh? 1 lakh. 1 lakh. What is the KE of the M Limited given in the question? 11.5 percentage. And here it is only because this is a unlevered firm. There is no debt at all. Equity shareholders does not have buy-in. Whereas M Limited is having debt in its what structure? Capital structure. Equity shareholders will feel buy-in. So the expectation of the equity shareholders will be higher than the N Limited, right? That's why they are having 11.5 percentage. And the KD, cost of debt, comes to 7 percentage. Now I am going to calculate the value of equity. What of equity? Value of equity means market value of equity is equal to earnings available to the equity shareholders divided by K. Comfortable? Sir, I am going to calculate, man, the value of the equity of the company M Limited. Can I? Yes, sir. What is the EBIT? 20,000. Sir, if the debt is how much lakh? 1 lakh. And KD is 7 percentage. So 1 lakh into 7 percentage come to 7,000. They are supposed to pay to the debt holders. Can I proceed? Appa 20,000 evlo pochuna? 7,000 pochuna. 13,000 rupees will be the earnings available to the equity shareholders. Are you all participating? So 13,000 divided by 11.5% is their expectation. So 1,13,043 is the market value of equity of levered firm. Enna எல்லாரும் participate பண்றீங்களா? Coming to the, sir, value of equity of the unlevered firm. Correct? What is the EBIT? 20,000. Are they liable to pay any interest? No, sir. That means 20,000 rupees is the EBIT. Yes, sir. What is the expectation? 10 percentage. So what is the value of market value of equity? Sir, enna sir, idu 1,13,000 da irukku, 2 lakh da irukku. Sir, there only equity I have considered. Sir, here equity plus dash has to be added. Debt has to be added. So the value of firm is equal to market value of equity plus market value of data. Just now you calculated for a levered firm, value of equity is 1,13,043 plus 1 lakh is the debt. So 1,13,043 plus 1 lakh comes to 2,13,043 is the value of the. I am going to, sir, picturize that in my table. Two firms are there. One is what limited? M Limited and N Limited. M Limited is having equity and N Limited is having debt. Sir, for equity, what is the value of equity? 1,13,043. Are you all really with me? 1,13,043. What is the value of debt? 1 lakh. So the value of the firm is equal to 2,13,043. But in N Limited, value of debt is 0. And value of equity comes to 2 lakhs. So 2 lakh plus 0 comes to 2 lakhs is the what of the firm? Value of the firm. So as exactly MM said that value of the levered firm is higher than the value of the unlevered firm. Correct? So people will start flying from the levered firm to the unlevered firm, right? Now I will tell you how the arbitrage process will work. If you have 10% shares of M Limited, you have to answer to me. Is M, my dear lovable students, levered, unlevered? So in levered, equity 10% you are holding. Your value of investment in equity shares is 10% of 1,13,043. That means 11,304.3 you are holding. That means in this 1,13,043, you are holding how much percent? Up 1,13,043 into 10% comes to 11,304.30 is your present investment. Correct? And return will be how much percent? 10%. Actually now this company, levered firm, is having EBIT of 20,000. Yes, sir. Out of that 7,000 they paid as interest. So 13,000 is the earnings available to the equity shareholder. If you are holding 100%, they will give 13,000 rupees, right? But if you are holding only 10%, so the present return you are enjoying is 1,300. Can I proceed, sir? Now what is the alternate strategy? You will jump from the levered firm to the. Sir, sell your 10% shares of the what firm? Levered firm at how much rupees? 11,304.3. So first step number 1, sell it. So you will get 11,304.30. Getting it? Yes, sir. And borrow 10% of the levered firm's debt. Correct, sir? Tell me, man, sir, is a levered firm is having debt? How much? 1 lakh. 1 lakh into how much percent? So second step should be what? Borrow. How much borrow? 10%. So my dear lovable students, sir, 11,304 plus 10,000 comes to 21,304. 3 rupees will be there in your pocket. And invest the money, that is 10% in the unlevered firm stock. What is the value of the unlevered firm? 2 lakh. So out of this money available, you have to invest. You are going to invest 2 lakh into how much percent? That means from your pocket, how much money will go? That means, sir, 21,304.3 minus 21,000 means 1,304.30 will be there still in your pocket. This is called as arbitrage gain. Comfortable? So the total resource or money we have will be totally 21,304.3 will be there in your pocket. Picturizing. Yes, sir. Yes, sir. Solle. And invest 10% of 2 lakhs comes to how much? So, out of the money available of 21,304.3, if you invest 20,000, still you are having 1,304.3. Yeah. Yes, sir. Now, I am going to find out the net income, my dear lovable students. Earlier, I was 10% equity shareholder in levered firm. Earlier, I enjoyed 1,300. I already find out, man. Now, I am a 10% equity shareholder in the unlevered firm. What is the EBIT of the unlevered firm? 20,000. There, how much I am, sir, holding? 10%. So, 20,000 into 10% comes to, I will get dividend of 2,000. But I am having personal borrowing. What borrowing? Because I have borrowed. How much I borrowed? 10,000 I borrowed. For that, I have to pay KD. What is the KD available in the question? 7%. So tell me, 10,000 into 7% comes to 700. So from 2,000, if how much goes? I will be getting 1,300. Exactly the same. Are you all really with me? That means because of the what process also, arbitrage process also, my income has not been. So your return will be 10% EBIT of the what form? Minus interest to be paid on the borrowed fund. Correct? But 20,000 not a 10%. Will we get 2,000? And we borrowed 10,000. For that, are we liable to pay 7%? So 700. So 2,000 minus 700, 1,300 will be the net income. Even after you moving from levered firm to the unlevered firm, still in your pocket 1,304 excess money will be there. For that 1,304, can you eat ice cream? Now your returns remain the same 1,300, which you can getting from what limited? Before investing in M limited, but still you have 1,304 excess money available with you. Hence, you are better off by doing the arbitrage. Comfortable? If you see the key moments in this match, in the above example, you have not invested the entire amount received from sale of shares of levered plus amount borrowed. Correct? Because the total money available with you was 21,304. You invested only 20,000. Number two, you maintain same level of earnings and reduced investments. Correct, sir? Alternatively, you could have invested entire amount in the what company also. Sir, instead of keeping this 1,304.3 as idle in your hand, if there is no good projects with you as an investor, you can park even this money also in the unlevered firm and you can enjoy KE there. Then automatically you will be having higher return. Correct? In that case, annual earnings would have been. I'm moving into illustration number 2. And can we finish off the second question from the leverage? We are having two type of leverage are there. One is arbitrage are there, primary arbitrage and the secondary arbitrage. Comfortable? The same question. Following data is available in respect of two company having same business risk. Capital employed how much? 2 lakh. EBIT how much? 30,000. KE how much? 12.5. Look at here, man. This is levered company and this is what? Unlevered. They take 10%, my dear lovable students. How much lakh? 1 lakh. Equity 1 lakh. 1 lakh plus 1 lakh. That's why here it is 2 lakh because capital employed should be same. If two companies are alike in, an investor is holding 15% shares in what company? Calculate the increase in annual earnings of investor if he switches his holding from levered to the if you want to know increase in what earning, annual earnings, 100% of the money should be invested in the unlevered firm. Can we do? Yes, sir. Sir, everything actually they have given. Sir, tell me. I'm going to value of the firms. Tell me, this is levered firm and this is unlevered firm. What is the EBAT? 30,000, 30,000. Will both the company have same? Yes, sir. Less interest. Only levered firm is liable to pay interest. Correct? Yes, sir. What is the debt? 1 lakh. 1 lakh or 10% comes to 30,000, 10,000 levered firm மட்டும்தான் less பண்ணணும். யாருக்கு less பண்ணக்கூடாது. So earnings available to equity shareholder is 20,000 and 30,000. Can I proceed, sir? You tell me what is the KE, sir. KE is how much percent? 12.5%. Right, sir? So 12.5 is the KE of the levered firm and also KE of the unlevered firm. Because specifically they have not bifurcated what is the KE. Last question they have given separately. Hello, sir. So calculator man, sir, inga 30,000. I'm first calculating unlevered firm, and 30,000 divided by 12.5% comes to 2,40,000 is the value of the, whereas my dear lovable students, value of equity, correct? What is the earnings available to the equity shareholder? 20,000, because after 30,000 you are liable to pay 10,000. But 20,000 divided by 12.5% comes to 1 lakh. And sir, to this I have to add n of debt, value of debt. How much value of debt? 1 lakh. But here value of debt will be 0. So the value of firm will be value of equity plus value of debt comes to 2 lakh. And but here 2 lakh 40 plus 0 comes to 2 lakh 40. Correct? In this situation also, the value of the what firm? Levered firm is higher than the value of the unlevered firm. That means here also what arbitrage will work. But last question, 10% was the holding. Here you are holding 15%. So come on, man. So in this 1,60,000 you are holding 15. 1,60,000 into 15% comes to 24,000 is what the amount you are holding. Correct? You sell it, you borrow it, you will be having sufficient money with you. You invest 100% in the unlevered firm. Correct? Then your net income will increase. Same. Increase. Come on, man. Analysis. Now the value of levered company is more than that of the Purida. Therefore, investor will sell his shares in what company? Levered company. And buy shares in the unlevered company. To maintain the level of risk, he will borrow proportionate amount and invest that also in the shares of the what company. Because question 1, how much is the increase in income? That means in order to enjoy more income, my dear lovable students, you should not keep anything in your hand. Can I proceed? So investment and borrowing. Come on. Sir, what is the current equity share capital of the levered firm? 1,60,000. Adod evlo percent? 15%. That means now you are holding 24. What is the debt of the levered firm? 1 lakh. Adod evlo percent borrow pannid? 15%. 1 lakh into 15% come to 15,000. So what is the total money available with you? 39,000. Sir, actually, ideally, what is the value of unlevered firm? 2,40,000. On that also you are going to invest, sir, 15%. So 2,40,000 into 15% comes to 36,000. But in place of 36,000, I am going to invest 30. That means 3,000 extra I am going to invest. For this 3,000 extra, I will get additional return. Are you all really with me? Now, my dear lovable students, I totally invested 39,000 where? Unlevered firm. Unlevered firm, I should get KE. What is the KE of unlevered firm? That means I will totally get 4,875. Enough clarity, Sir, on that, can I enjoy entire 4,875? Or I have to pay my interest on personal borrowing? What is my borrowing? 15,000. What is the KD? 10%. 15,000 into 10%. Out of 4,875, 5,500 I should pay as interest. Purida. So the net income in my pocket will be 3,375. When I was in levered firm, their earnings available to the equity shareholders was total எவ்வளோ ருபீஸ் அவங்களோட EBIT 30. அதுலேருந்து 10,000 போச்சுன்னா இந்த 20,000 15% எனக்கு கொடுத்துருந்தாங்களா? அப்போ சார் எவ்வளோ இன்ட்டு எவ்வளோ? 20,000 into 15% comes to 3,000. Are you able to appreciate? So the incremental income, extra income, what I am enjoying because of shifting from levered firm to unlevered firm is 375 rupees, right? Sir, the ideal investment what I am supposed to be make is only 36,000. But I have made extra investment of, for this 3,000, can I enjoy KE in unlevered firm? K is 12 point. So 3,000 into 12.5% comes to 375. By that way itself, this answer can be find out shortcut. Comfortable. Instead of going this much in a sir around, sir, namma ange nam answer potalam. Last shortcut, have you understood? I'm moving to the last question, man. Illustration number 8. When the value of unlevered firm is more than the value of what firm? This is our secondary arbitrage. What arbitrage? So if the arbitrage is a primary arbitrage, value of the levered firm will be more than the value of the முதல்ல செல் பண்ணு, அப்புறம் borrow பண்ணு, அப்புறம் invest பண்ணு, அப்புறம் net income calculate பண்ணு, compare பண்ணு. Are you really with me? Yes, sir. Sir, if the value of the unlevered firm is higher than the value of the levered firm, please don't borrow. What man? Please don't. What you are supposed to do is, நீ sir, first one sell it. என்ன பண்ணு? செல் பண்ணு. ஹலோ சார், செல் பண்ணதுக்கு அப்புறம் சார் டோன்ட் போரோ. வாட் மேன்? டோன்ட் போரோ. ஆர் யூ ரியலி வித் மீ? Because already you are having higher investment. Because you are having 10% equity in the unlevered firm. Hello sir. And you want to invest only 10% in the levered firm. So you are having sufficient money with you. Yes sir. Then you have to invest. You have to what? In both debt and equity. In both what and what? Debt and equity. In both what and what? In debt equity ratio. In what ratio? Then calculate the net income and compare. And calculate the net income and, hey, are you all really with me what I am talking to you? My dear lovable students, I am moving into the next question and make you understand the secondary arbitrage. There are two companies, U Limited and L Limited. Hello, sir. Yes, sir. Sir, having same EBIT of 20,000 each. That L Limited is a what firm? Having debt of how much lakh? At 7%. And cost of equity of U Limited are 10% and 18%. Compute how arbitrage process will work. Hello, sir. Yes, sir. First one, unlevered firm. Who's unlevered? U and L. They are unlevered. U Limited unlevered. Abdina, who's levered? L. Are you all really with me? Okay, man. Come on. What is the EB80 for both the company? 20,000, 20,000. Sir, always it will be same. Sir, who is having debt? L. L is levered. How much lakh? 1 lakh. KD, 7%. But KE they have given different. Correct? Here it is 10 and here it is 18. Yes, Nyayam. Because in a levered firm, what is there? Debt is there. They will be expecting more return. That's why it is how much percent? 18%. Come on, man. Value of what share? Equity share. Which is nothing but, man, sir, earnings available to the equity shareholders divided by KEA. Here EBIT will be the earnings available to equity shareholders. 20,000 divided by 10% comes to, here out of 20,000, debt 1 lakh into 7%, 7,000 they have to give it as interest. 20,000, 7,000 pochana will be the earnings available to the calculator, sir. 13,000 divided by 18% comes to 72,222 is the value of equity. Hello, sir. Can I calculate the value of firm? For an unlevered firm, sir, value of firm is equal to value of equity. Can I proceed? For a levered firm, value of equity plus value of debt, which is 1 lakh plus 72,222 comes to 1 lakh 72,222. Look at the situation. Here the value of the unlevered firm is higher than the value of the, that means people will start fly from the unlevered firm to the levered firm. Sir, this is how arbitrage process will happen. If you have 10% shares of what firm? Unlevered firm. That means 2 lakh or எவ்வளோ percent? 10%. உன் கையில் உனக்கு எவ்வளோ கிடைக்கும்? That is an investment of 20,000 is with you. Comfortable. And you are getting 10% return. On this 20,000 EBIT, you can enjoy 10% job. Up 20,000 into 10% comes to 2,000. Investment will be 10% of the earnings available to equity 1,000. How much? 2,000. That means in the present company, in the unlevered firm, you are having 20,000 equity. Yeah? You are enjoying 2,000 rupees. Now you can, sir, jump from the unlevered firm to the levered firm. Sell your share. First, you have to unlevered firm. How much you will get? 20,000. And buy 10% shares of levered firm. Equity plus what? Debt. Because in unlevered firm, only what was there? Equity was there. Now you are shifting from unlevered to in levered. What and what is there? Equity and debt is there. So in the debt equity ratio, you have to go and invest. Can I? Come on, man. Sir, what is the total market value of equity? 72,222. அதோட 10% invest பண்ணிக்கோ. Which come to 7,222. Comfortable? What is the market value of the debt? 1 lakh. அதோட 10% invest பண்ணிக்கோ. Total 10,000. So the total investment in the levered firm is required is only 17,222. 17,222. Are you really with me? But you are having how much rupees in your hand? 20,000. Wow. Are you really with me? But in order to shift from dash firm to dash firm, unlevered firm to levered firm, I need only 17,222. So I will be having surplus money available. So 20,000 minus 17,222 comes to 2,778 extra money will be with you. Now I am checking what will be my return before arbitrage process and after arbitrage process. Correct? What, man? Ippo, you are in levered firm. 10,000 rupees, 1 lakh rupees is the market value of data. On that you are holding 10%. Abdina, 10,000 you are holding. For that you will get KD of 7%. 700 rupees will come to you. Ennapa? And you are holding 10% of equity. What is the market value of equity? 7,222. Adoda 10% comes to 7,222. Correct? Adoda KE you will get. What is the KE of the levered firm? 18%. Up 7,222 into 18% comes to 1,300. Look at here, 1,300. That means total return will be how much? 2,000. This will be the return from the levered firm now. Correct? When you are in a firm, unlevered firm, you were holding 10%. Correct? What was the EBIT of that company? 20,000. Idoda 10%. Now also you are getting 2,000. That means your income has not been changed. But still in your pocket 2,778 is there. This is called as what gain. So in both the case, the return received is how much? 2,000. And still you have excess cash of 2,778. Hence you are better off by doing what? Arbitrage. That means you will start selling the what company share and buy dash company share, thereby pushing down the value of shares of unlevered firm and increasing the value of levered firm till what is reached. So in the above example, sir, have you invested 100%? No, sir, because you are having still money. Yes, sir. Sir, we have not invested entire amount received from sale of shares of what company? Sir, we have the same level of earnings along with the reduced investment. Am I right? Yes, sir. Alternatively, we could have invested entire amount in the what company? If we have invested entire amount in the levered company, we would have got extra interest and we would have got extra dividend and our earnings would have been increased. Comfortable? That means if you want, you can invest this extra 2,778 also. Enge? Levered company. Debt liya, equity liya? Both. Mix. Enna mix la? Debt equity mix la. அப்போ ஆட்டோமேட்டிக்கா முன்னாடி இருந்த இன்கம் விட இப்ப இருக்கிற இன்கம் என்ன ஆகும்? அதிகமாகும். அப்படின்னா உனக்கு ஆர்பிட்ரேஜ் கெயின் இருக்காது. அந்த ஆர்பிட்ரேஜ் கெயினை நீ வந்து ஃபுல்லா கொண்டு போய் என்ன பண்ண போறேன்னா இன்வெஸ்ட் பண்ண போற. ஹலோ? With this primary arbitrage and secondary arbitrage comes to one. Sir, in order to work primary arbitrage, value of the levered firm should be higher than the value of the unlevered. Then people will start sell the shares of the levered firm and they will borrow if required. Then they'll be having lot of money will be with them. The entire money they will not be investing in the levered firm, but even after the arbitrage process, they will be having same income and extra money will be with them. That extra money is called as arbitrage gain. Alaga purida? Appreciate Pandriya. But at any chance, if the value of the unlevered firm is higher than the value of the levered firm, such a situation is called as secondary arbitrage. People will start selling the shares of the unlevered firm and they will start investing the shares of the levered firm. Automatically, it will, sir, the shareholder will be having the same income with extra money in his hand. That extra money is called as arbitrage gain. With this, we can say that we are through with the revision of cost of capital. We are with the revision of capital structure theories. And the third one, arbitrage process. Are you all really with me? We are moving into the coming slot of discussion is EBIT and EPS analysis, my dear lovable students. That is also a part of this chapter where, sir, you have to find out the indifference point. Such a question may come in examination. We will discuss the concept of EBIT, EPS analysis and will be doing past 3 examination question from EPS, EBIT analysis. Comfortable? Have a revision up to this, redo the questions and come back. We will continue with the discussion of EBIT and EPS analysis.